Hello, good people. So today I wanted to discuss about trading the trend line, bullish trend line. So what happens with trend line? Price prints a low, it prints a high, then comes prints a higher low, then prints a higher high. Once you have two lows, you connect using a trend line, a straight line. So what we do expect while trading a trend line is once the price retraces back to form another higher low around the trend line, we do expect rejections, showing signs of uh, more bulls entering. So this is the idea behind trading bullish trend lines. So let's see other few examples before I give you. So you can see you make a low, you make a low, then once price breaches the next high, the next time it comes to retrace to the trend line, we do expect that prices will continue being bullish. So let's see another example. Here's another good example. You can see price makes a low, makes a low. Next time price comes to form another low around the trend line, we do expect to execute bullish positions. So let's look at an example in the market right now. So I want to look at DXY. So DXY, the idea behind DXY is that for all prices that are USD XXX, they always follow the DXY in the same direction. For all prices that are XXX USD, they go inverse to the direction of the DXY. So we can see that the DXY this year has been very much bullish. The last time prices were around this place was around 203, 203, 202. So it seems that the dollar has been doing quite well for the year. So here is one of our lows. We push up, form a high, another low. We push up, form a high, another low. We push up, form a high, another low. We push up, form a high. So we are in a very clear bullish trend. So you can see that prices have retraced all the way to this level, to our trend line, our place of interest. So I'll be looking to execute long positions on DXY. This means that I'll also be looking to execute long positions on things like USD JPY, USD Swiss, any USD something. I'll be looking for long positions, and also be looking for short positions on pairs like Euro USD, GBP USD, such pairs. So let's go down to our 4-hour time frame. So I noticed this channel here. You can see this trend line that I've drawn. It's descending, but it's acting like a floor. So it's our support. So you can see that price touched here, rejected, touched here, rejected. The price has also come and touched here, which is also a confluence of this trend line and this trend line. So this is a very strong entry position. So another thing, you can see this low, price pushes up, it forms a low which is slightly below this low, but then on our RSI we form, well, this lows formed, the RSI was at around 24, then a lower low on price, but then here the RSI forms a higher low at around 29, which if we draw a trend line here, you can clearly see that here there's a formation of higher low, while here there's a formation of a lower high, a lower low. Here there's a formation of a higher low. That is divergence. So this is the third confluence of this setup. So we see the first one, the ascending trend line, which acts as a support. We can see also this trend line, which acts as another support, and we can see a divergence of price and momentum. So this is a very strong bullish setup. So obviously, once I execute my long positions, I will be putting my first take profit at the neckline. Obviously, my stop loss will be always like will be around below this low. That will be my stop loss will be below this low. Then my other take profit will be at this high. Reasons why I'm not still looking to, I'm not assuming that the price will breach this low to the downside is because I always do expect a reversal pattern to be formed. An example is a H&S or a double top, which has still not been formed. So I'm still very bullish on DXY. So as I said, I'll be looking to long DXY, meaning I'll be looking for opportunities in USD JPY, USD Swiss for long positions. I'll be looking for short opportunities on Euro USD, on GBP USD. So let's look at an example on Euro USD. Euro USD had a very good bullish setup, which I never shared. You can see it obviously had a descending channel, which it breached on the downside. So which it breached on the upside. So obviously, in the long run, I'll be looking for long positions for Euro USD. But currently, so okay, let me explain this setup before I go to my idea right now. So you can see a very clean descending channel, price breached. These are higher low, these are lower high. Then we form a higher low, we form a higher high which has breached this level, meaning that prices are now looking to be bullish. Then price came. So what I was expecting, let me go down to low time frame. What I was expecting is that price will come, play around this place until it's touched this zone. But so I was expecting it to maybe come, bounce here, bounce back, bounce here, bounce back until it touches this place. Then I execute a long position. However, last week, due to some fundamental reasons, so let me explain. So once you can see price formed these lower high, higher low, higher high, meaning that the trend is changing. Then once price reached here, I didn't execute my long position here. I expected that price will play around this place for a while, maybe for a week, until it touches this zone. I'll explain why I was expecting the price to reach this zone before I execute my long position. However, I remember there were some fundamentals around here last week. You can see price pushed up, then it formed a very strong pin bar down and breached our trend line, where it came and tested our area of interest. The reason I was looking to execute this position, I always do like entering my position using order blocks. So I always I always do like trading order blocks that are around Fibonacci level 70.5 and 79, which was this order block around here. So if you go to low time frames, you'll see that the OB there are some OBs around here. So obviously I would have put my stop loss below this candle this week, then execute my position around that place. So and obviously my first take profit will be around here, but I never took this position. So what I'll be looking for in this channel, like I've explained, that because I'm expecting DXY will be bullish for maybe a week or so, I'll be expecting that this price, you can see it has formed kind of a channel here. So I'll be expecting that this price spikes up, touches this channel on this side, then I will now execute my short position all the way to around here, or where I'll be looking for obviously another place to take my long positions. Let's assume that the price will reach somewhere around maybe there. I'll be looking to execute my positions around these places, around Fibonacci 70.5 or 79%. That is where I'll be expecting to exit my position. So my idea of Euro USD is that price will spike up, touch this roof of this channel, then push downwards. Okay, so that is what I wanted to discuss. The other position, this trade I also did explain in my previous video. If you haven't seen my previous video, go and check it out. I'm expecting that the price will continue pushing up and either test this neckline or this trend line before I execute a short position. Remember, for such a scenario, how do we measure our target profit? From the highest point of our pattern to the neckline is the same position, is the same distance that we'll expect to. Once we execute our trade, we'll expect to exit our trade around the same distance. Okay, so those are the pairs that I wanted to discuss today. So, but the main idea of this video was our DXY. So let's see how it plays out. Thank you.